Hello and welcome to Finance Weekly Briefing, your concise roundup of the week's key economic and market developments. It was reported that currency markets were volatile through the final week of August, with risk sentiment fading into Friday after earlier strength in U.S. equities. EUR USD traded in a narrow range and ended close to the week's opening levels near 1.17. US PCE inflation was described as broadly in line with expectations, which was seen as keeping the door open for a Federal Reserve rate cut in September. It was noted that Euro area country prints were mixed ahead of the bloc-wide release. Headline inflation was said to have eased in France and Spain, while German inflation edged higher, leaving a picture of broadly stable price dynamics. Euro area unemployment was reported at 6.2%, and focus shifted to the preliminary HICP estimate and the durability of services inflation. It was highlighted that EUR USD repeatedly found demand on dips toward the 1.16-1.1620 area and met supply into the high-1.16s. US ISM manufacturing was reported at 48.7, below expectations, though sub-indices suggested some improvement in orders and a modest easing in prices. Later in the week, ISM services was said to have risen to 52.0, while the ADP report showed private payroll gains of 54,000. Attention was drawn to the U.S. labor market releases. Job openings in the JOLTS report were described as weaker than expected, reinforcing the view that conditions were cooling without collapsing. Markets were said to have priced a full 25 basis point Fed cut in mid-September, with consensus looking for non-farm payroll growth near 75,000 and the jobless rate edging up toward 4.3%. Sterling was reported weaker after a UK cabinet reshuffle ahead of budget discussions, which coincided with a sharp rise in long-dated gilt yields. The 30-year yield was said to have jumped to the highest level since the late 1990s, and EUR GBP moved higher from roughly 0.864 toward the 0.87 area. The move was framed as part of a broader risk-off tone and renewed concern about the fiscal outlook. Scandinavian currencies were mixed. It was observed that the Swedish krona strengthened into month-end, pulling EUR/CK below 11.10, and the week opened near 11.07, with 11.00 cited as a key marker. Later, softer than expected elements in Swedish inflation prints, alongside still elevated core measures, left the near-term policy signal uncertain. Markets were reported to be leaning toward a Riksbank cut later in the year, with November mentioned as a likely window. It was stated that EUR/CK hovered close to 11.00 through much of the week, with 10.93 flagged as a notable support area. In Norway, EUR/NOK finished August just below 11.80, and the 200-day moving average near 11.72 was said to have acted as support. Norwegian house prices reportedly rose 0.6% month-on-month, while expectations for Norges Bank pointed to further gradual easing toward a 3% policy rate, with the next decision slated for mid-September. In Central Europe, it was reported that Poland's central bank cut its policy rate by 25 basis points to 4.75%, aligning with expectations amid inflation readings drifting toward the target band. In Switzerland, EUR/CHF was described as firming toward 0.94 after a softer inflation print, with core inflation around 0.7% year-on-year. It was suggested that the Swiss National Bank's cutting cycle had likely ended after bringing its policy rate to zero, leaving global risk drivers to dominate the currency's range. In Asia, China's manufacturing PMI headline was said to have improved, but details were described as weak, with construction components near cycle lows and the employment index at the weakest in a year. A services sector PMI release mid-week was flagged as the next piece to complete the near-term picture. The mixed Chinese data were seen as adding to the cautious tone across risk-sensitive currencies. Interest rates were described as choppy but contained, with U.S. Treasury yields holding in a 4.20 to 4.40% band for the 10-year note early in the week. The calendar was characterized as heavy, with PMI updates, JOLTS, ADP, ISM services, and Friday's non-farm payrolls all in view. Lower payroll numbers were seen as likely to pull yields down further by reinforcing expectations for a September Fed cut. Later in the week, a weaker-than-expected JOLTS report was said to have pushed U.S. yields lower, taking the 10-year toward roughly 4.20% and flattening the curve as the long end rallied. The two-year yield was noted at its lowest levels since 2022 as markets priced a full September move and high odds of additional easing by year-end. It was emphasized that the labor data were consistent with a cooling, not collapsing jobs market. Curve dynamics were highlighted globally. The UK 30-year gilt yield was reported near the highest since 1998, reflecting fiscal and policy uncertainties. Germany's 30-year yield was said to have moved above 3.4%. The US long end was noted as approaching 5% at one point earlier in the year, and Japan's 30-year JGB yield was reported around 3.29%, with the long end under pressure as inflation concerns persisted. As the week progressed, softer US labor signals helped bring global yields lower from the highs, while issuance pressure in primary markets and central bank rhetoric were cited as counterweights. It was reported that roughly $90 billion of new global issuance contributed to early week steepening and long-end weakness before the data-driven rally. Market pricing into the weekend implied a full 25 basis point Fed cut in September and elevated odds of another reduction before year-end. Commodities were supported by the rates move. It was reported that gold and silver extended gains as real yields eased and risk sentiment turned more cautious. The precious metals bid was framed as consistent with falling front-end rates and lingering geopolitical uncertainty. On geopolitics, attention in Europe was drawn to France. A parliamentary confidence vote was scheduled for Monday, the 8th of September, and a sovereign rating review by Fitch was slated for Friday, the 12th of September. France's outlook at the agency was noted as negative, and policy discussions with opposition parties were reported, underscoring the near-term political uncertainty. Trade policy headlines remained active. It was reported that a U.S. law, i.e. pay, was interpreted as rendering certain tariffs illegal, yet the measures were allowed to remain in force until the 14th of October. Preparations were described for a plan to replace the measures with broader, sector-wide tariffs, keeping tariff risk in focus for inflation and supply chains. It was further reported that India was said to have discussed cutting its tariffs to zero if the United States reciprocated on high import duties, though the timeline and scope were not clarified. Investors were reminded that tariff developments were viewed by policymakers as inflationary, reinforcing the sensitivity of rates and currencies to trade news. Markets were poised to respond to any concrete steps on either side. In the United States, it was reported that a national housing crisis declaration was being considered, with details under review. Separate reports indicated that multiple candidates for the Federal Reserve's top post were also being evaluated for the two open board seats. The Fed nominee who testified before the Senate emphasized support for central bank independence, a point noted by markets given ongoing policy and tariff debates. In Asia, a major military parade in Beijing marked the 80th anniversary of the end of World War II, with high-profile international attendees reported. China's leadership was expected to speak and to display advanced capabilities, highlighting the country's diplomatic reach. The event reinforced the broader theme of geopolitical visibility and defense signaling in the region. Looking ahead, focus was placed on near-term catalysts. The U.S. non-farm payrolls report and next week's inflation prints were seen as decisive inputs for the Federal Reserve meeting scheduled for the 17th of September. In the Nordics, attention was on Norges Bank's the 18th of September decision and the Riksbank's the 23rd of September meeting, while Sweden's inflation trajectory and growth data were viewed as key to timing. In sovereign risk, France's votes and the 12th of September rating review were flagged, and the 14th of October tariff deadline remained in view. Thank you for watching Finance Weekly Briefing. Subscribe to stay updated on the latest market and economic news.